It's Larry Gonzales with your housing market update for the middle of May. A lot going on this week, really big news. Let's get right into it. All right, housing market, big three, prices up, inventory up, rates down. I love it when I have green arrows across the board, and we have that this week. Homebuilder Sentiment had a report come out on Monday. We'll get into that. Inflation was cooler than expected. And then initial jobless claims, another drop, initial, but continuing or up. We'll get into that as well. All right, Homebuilder Sentiment. This was a first decline in 6 months. All right, typically builders are feeling positive when their sentiment is above 50. You can see the last 6 months it was going up. Well, this last month went down. And again, April tears, remember those April tears on interest rates kind of made the builders feel kind of sad too. So their sentiment was lower and really across the board, current sales, future sales, and buyer traffic all down last month. Look at buyer traffic, really, really low. And we're seeing that in certain areas of the country and in certain areas of Oahu as well. So consumer price index. All right, this was a big one and caused interest rates to come down a good amount yesterday. Headline and core were down 3.4% for the headline, 3.6 from 3.8% for the core. And the biggest reason for the that we still had higher inflation was shelter costs are still high and car insurance keeps going up. Home insurance too, but certainly for this report, car insurance was a big culprit. We had the PPI, and that's a wholesale inflation report that came in a day before on Tuesday, and that one was hotter than expected. But really, the reason for it being hotter than expected was last month. The previous month was revised even lower. Not a good report, but it was weird. Interest rates actually went down a little bit. We thought they would go up, but actually they went down just a tad. Wednesday they went down a pretty good amount because of the CPI report. And the big thing here is the PCE, all these acronyms. The PCE comes out at the end of the month. That's a personal consumption expenditure report. It's a big inflation reading. And the PPI number actually will go into the PCE, so it remains to be seen how that report will go. Really a good start to May for interest rates. Initial jobless claims, not going to spend a lot of time here. Initial claims down about 10K. Continuing claims up a little bit, but really not much. We need to get over that 2 million on continuing claims. Employers are not getting rid of their buyers. So, employees are having a hard time getting rid. They don't want to get rid of their employees. And those that are, they have some pretty decent severance packages, and they probably haven't even applied yet. But we expect these numbers to go up. We need them to in order for the Fed to lower the Fed funds rate. So VA rates, solid inflation report, keeps pushing interest rates down. You can see that over here. Right in the mid sixes now, depending on where your credit score is. Mid sixes to low sixes is what I'm seeing right now. So that's great news. Next week is kind of light on the news front. Don't expect too much movement up or down, but it's again great start to the month of May. 10-year Treasury movement last week, or really before Wednesday, we were squarely between 4.4 and 4.7. Really, there was a good opportunity if we had a bad inflation report that was going to push the 10-year Treasury up. Man, we got below 4.4. And look at all this room below down to right near 4%. So if we get another good inflation report the next couple of weeks, we could see interest rates come down bigly. All right, that'd be great news. So so that's something to look forward to. Again, 10-year and the 10-year Treasury, and then the 30-year fixed rate. They kind of dance together. They move in tandem. Conventional rates are about 2.5% to 3% higher than the 10-year. So at 4.3, you're looking at about 7% roughly, maybe a little less than 7% for conventional. So let me see getting into that. So what does this all mean? Hey, last week applications were down. I think that's the hangover from April. Inventory is going up. I'm actually hosting a mega open house this weekend in Ewa Beach. Over 30 homes on the market right now, above $1 million. All right, the value of the home is there, but right now with rates being this high, you're seeing a lot of people just sitting on the sidelines. But there's some great houses on the market. If you're in Ewa Beach or if you're looking to buy, go check out these homes because there's some really, really, really great homes for sale, and some of them have credits for 2-1 buy down. So really some awesome opportunities to get some homes this weekend and meet a lot of people too. Expect to happen, we're getting in that PCS season, that moving season. Expect apps to continue to go up. Inflation report, again, it's a good shot of good news for the housing market in Hawaii. It absolutely is. So seller credits, they're going to be around. All right, the homes that are sitting longer, certainly on the west side, on the leeward side, are the ones that are not offering credits, and they're sticking to their stubborn guns. Places like Kailua, Kaneohe, they don't need seller credits because those homes are selling lickety split. All right, that's all I have for you guys this week. Hope you have a great weekend. We'll talk to you later. Aloha.